Question 1. Title search and examination. A property owner discovers an easement recorded by a utility company on their land after completing a title search. The owner is unaware of this easement and wants it removed. Which of the following steps should the property owner take to address the easement in the context of title insurance? A. File a claim with their title insurance company under the owner's policy. B. Request the utility company to voluntarily remove the easement through negotiation. C. Pursue a quiet title action in court to remove the easement. D. Record a quitclaim deed to transfer the property to a new owner without the easement. Answer. C. Pursue a quiet title action in court to remove the easement. Explanation. A quiet title action is a legal proceeding used to resolve disputes over property ownership, including issues related to easements. Title insurance generally does not cover known encumbrances like easements unless specifically covered by the policy, so the owner's policy wouldn't apply here. Quiet title actions are designed to remove any cloud on the title, such as an unwanted or disputed easement. Negotiation with the utility company might not be sufficient if they legally hold the easement. Transferring the property via a quitclaim deed does not remove the easement and may not provide clear title to the new owner. Wisconsin Statutes, Chapter 706. Question 2. Scenario-based question: real estate transactions and closings. Mr. Anderson is purchasing a property in Wisconsin and has received a title commitment. However, Schedule B of the title commitment lists several exceptions, including an undisclosed mechanics lien filed by a contractor for unpaid work on the property. What is the most appropriate course of action for Mr. Anderson to ensure clear title before closing? A. Proceed with closing, as the mechanics lien will not affect the new owner. B. To ask the title insurance company to remove the lien from the policy by adding an endorsement. C. Delay the closing until the seller resolves the mechanics lien and provides proof of payment or release. D. Ignore the mechanics lien, as it is the seller's responsibility and not relevant to the buyer's title insurance. Answer. C. Delay the closing until the seller resolves the mechanics lien and provides proof of payment or release. Explanation. A mechanics lien represents a legal claim by a contractor or supplier for unpaid work or materials. If this lien remains unresolved, it can create a cloud on the title, affecting Mr. Anderson's ownership rights and potentially leading to foreclosure. It is critical to clear the lien before closing, as title insurance typically excludes known defects like unresolved liens. Schedule B lists exceptions to coverage, and mechanics liens are usually among these exceptions unless they are resolved or endorsed out. Wisconsin Statutes, Chapter 779, Construction Liens. Ignoring the lien or proceeding without resolution could expose Mr. Anderson to financial and legal risks. Question 3. Types of title insurance policies. Which of the following best explains the difference between an owner's policy and a lender's policy in Wisconsin title insurance? A. An owner's policy protects the mortgage lender against title defects, while a lender's policy protects the buyer. B. An owner's policy protects the buyer from title defects, while a lender's policy protects the mortgage lender. C. An owner's policy is optional, while a lender's policy is required by law for all real estate transactions. D. An owner's policy covers future title issues, while a lender's policy only covers past title defects. Answer. B. An owner's policy protects the buyer from title defects, while a lender's policy protects the mortgage lender. Explanation. In Wisconsin, an owner's policy is designed to protect the property buyer from title defects such as liens, encumbrances, or ownership disputes that may arise after the purchase. It ensures that the buyer holds a clear title to the property. A lender's policy, on the other hand, protects the mortgage lender by ensuring that the lender's security interest in the property is valid and enforceable, covering potential losses due to title defects. Both policies are important but serve different purposes. Wisconsin Statutes, Chapter 631, Insurance Contracts. Option A incorrectly switches the roles, C misstates the legal requirements, and D misrepresents the scope of coverage. Question 4. Title insurance policy provisions. A buyer of a commercial property in Wisconsin finds out after closing that there are restrictions on the property's use due to local zoning laws. The buyer holds an owner's policy. What should the buyer expect regarding coverage for this issue under their title insurance? A. The owner's policy will automatically cover any zoning issues as they relate to the use of the land. B. The owner's policy will not cover zoning issues unless a zoning endorsement was added. C. The owner's policy will cover zoning issues only if they directly affect the title, regardless of endorsements. D. Zoning issues are always excluded from title insurance coverage. Answer. B. The owner's policy will not cover zoning issues unless a zoning endorsement was added. Explanation. Title insurance generally does not cover zoning restrictions unless the policyholder has obtained a zoning endorsement which specifically addresses such issues. A standard owner's policy focuses on defects related to the ownership and transferability of the property, not on land use or zoning laws. Without the endorsement, zoning issues are excluded. This is a common limitation in title insurance policies, auto endorsements, and amendments. Wisconsin statutes. Chapter 632 Insurance Contracts. Specific lines. Question 5. Title search and examination. When conducting a title search for a residential property, a title examiner discovers that the property has a covenant restricting certain types of businesses. What is the correct course of action for the title examiner regarding this covenant? A. Exclude the covenant from coverage and list it as an exception in Schedule B of the title commitment. B. Ignore the covenant as it does not impact residential use of the property. C. Recommend the removal of the covenant through a quitclaim deed. D. Include the covenant under the general coverage provided by the owner's policy. Answer A. Exclude the covenant from coverage and list it as an exception in Schedule B of the title commitment. Explanation. Covenants, conditions, and restriction ERS are commonly included in the public records and can limit how a property is used. When a title search reveals such restrictions, they are typically excluded from coverage and listed in Schedule B of the title commitment. This ensures the buyer is aware of the restrictions and the title insurance company is not liable for any claims related to the enforcement of the covenant. Wisconsin statutes. Chapter 706. Statutory requirements for title insurance policies. Ignoring the covenant or recommending removal without proper legal procedures would be incorrect. Question 6. Claims and dispute resolution. A property owner files a claim under their title insurance policy due to a boundary dispute with a neighboring property owner. Which of the following best describes the title insurer's obligation under the policy? A. The title insurer must defend the property owner in court but is not responsible for paying any damages awarded. B. The title insurer must defend the property owner and pay any damages awarded if the policy covers the dispute. C. The title insurer will investigate the claim but is not obligated to defend the property owner in court. D. The title insurer is only responsible for paying damages, not defending the property owner. Answer. B. The title insurer must defend the property owner and pay any damages awarded if the policy covers the dispute. Explanation. Title insurance policies typically include a duty to defend the insured in court against covered claims related to title defects. If the boundary dispute falls within the policy's coverage, the insurer is obligated to provide legal defense and cover any damages resulting from the dispute. This duty is an essential part of the policy, designed to protect the insured from financial loss and legal issues tied to title defects. Wisconsin statutes. Chapter 632. Duty to defend and subrogation rights. Question 7. Scenario-based question underwriting and risk assessment. MS Walters is purchasing a home and is concerned about potential boundary disputes as there was no recent survey conducted on the property. The title insurer is preparing to issue an owner's policy. What should MS Walters do to ensure coverage for boundary issues before completing the transaction? A. Request the title insurer to include a survey endorsement in the owner's policy. B. Proceed with the purchase as the title insurance will cover any future boundary disputes. C. Insist that the seller provide a survey before the closing but rely solely on the standard policy. D. File a quiet title action to resolve any potential boundary disputes before purchasing the property. Answer A. Request the title insurer to include a survey endorsement in the owner's policy. Explanation. While title insurance covers many issues related to the ownership of a property, it does not automatically cover boundary disputes unless a survey endorsement is included in the policy. A survey endorsement provides additional coverage for issues such as encroachments or boundary disputes that a survey might reveal. Without this endorsement, boundary-related claims may be excluded from coverage. Relying solely on the standard policy without the survey endorsement could leave MS Walters exposed to future disputes or to survey endorsement. Wisconsin statutes. Chapter 631. Insurance contracts in general. Question 8. Claims process for insured. An insured property owner discovers a forged deed in the chain of title and files a claim with their title insurance company. What is the insurer's responsibility in this situation? A. Deny the claim, as forged deeds are excluded from standard title insurance policies. B. Investigate the claim and, if the forgery is confirmed, compensate the insured for any loss. C. Automatically pay the insured for any potential losses without investigating the forgery claim. D. Require the insured to file a lawsuit to clear the title before taking any action. Answer: B. Investigate the claim and, if the forgery is confirmed, compensate the insured for any loss. Explanation: title insurance policies typically cover issues related to forgery and fraudulent conveyances. Upon receiving a claim involving a forged deed, the insurer must investigate the validity of the claim. If the deed is proven to be forged, the insurer is obligated to compensate the insured for any losses resulting from the defect in title. Forgery is a covered risk under most title insurance policies as it directly affects the legality of the title transfer. Wisconsin statutes. Chapter 632, Fraudulent Conveyances and Forged Documents. Question 9. Real estate transactions and closings. Which of the following correctly describes the difference between a title commitment and a title policy? A. A title commitment provides temporary coverage until the real estate transaction closes, while the title policy provides long-term protection. B. A title commitment outlines the conditions that must be met before the title policy is issued, while the title policy provides ongoing coverage after closing. C. A title commitment guarantees title insurance coverage, while a title policy specifies the final exceptions to coverage. D. A title commitment is optional, while a title policy is mandatory for all real estate transactions. Answer: B. A title commitment outlines the conditions that must be met before the title policy is issued, while the title policy provides ongoing coverage after closing. Explanation: a title commitment is a pre-closing document that outlines the conditions the insurer requires to issue a final title insurance policy. It lists potential title defects, encumbrances, and any conditions that need to be addressed before closing, such as lien releases or document recordings. Once these conditions are satisfied, the title policy is issued, providing long-term coverage to protect against title defects. The title policy formalizes the insurance coverage and specifies any exceptions that remain. Wisconsin statutes. Chapter 706, Real Estate Settlement Procedures. Question 10. Underwriting and risk assessment. A title underwriter in Wisconsin is assessing a property for insurability. The title search reveals that the property was involved in a bankruptcy proceeding several years ago, but the records are unclear on whether the property was properly discharged. What is the most appropriate action for the underwriter? A. Issue the policy with an exclusion for any claims arising from the bankruptcy. B. Deny coverage entirely, as bankruptcy-related issues cannot be insured. C. Obtain further documentation regarding the bankruptcy discharge before issuing the policy. D. Proceed with issuing the policy, as prior bankruptcies do not affect title insurance coverage. Answer: C. Obtain further documentation regarding the bankruptcy discharge before issuing the policy. Explanation: bankruptcy proceedings can create cards on the title if the property was not properly discharged or if there are unresolved creditor claims. A title underwriter must ensure that all bankruptcy-related issues are resolved before issuing a policy. This may involve obtaining additional documentation, such as court records, to verify that the property is free from bankruptcy-related encumbrances. Issuing the policy with incomplete information could expose the insurer to significant risk. Wisconsin statutes. Chapter 632. Bankruptcy and title implications. Question 11. Easements and title insurance coverage. A property owner discovers after purchasing their home that a neighboring property has an easement allowing them to use the owner's driveway. The owner's title insurance policy did not mention the easement. What is the title insurer's responsibility in this situation? A. Deny the claim, as easements are automatically excluded from title insurance coverage. B. Investigate, and if the easement was not disclosed during the title search, provide compensation or remedy. C. Defend the owner in court to have the easement removed. D. Add the easement to the policy and charge the owner an additional premium. Answer: B. Investigate, and if the easement was not disclosed during the title search, provide compensation or remedy. Explanation: easements are typically included in the title search and disclosed to the buyer. If an easement was not found during the search or not listed in the title policy, it may be considered a title defect. The title insurer is responsible for investigating the claim and, if necessary, compensating the owner for any losses caused by the undisclosed easement. Wisconsin statutes. Chapter 706, Real Property Conveyances. Question 12. Title commitment review. A buyer is reviewing the title commitment for a property they intend to purchase. The commitment lists a tax lien on the property from 2 years ago. What is the appropriate course of action for the buyer? A. Ignore the lien as it will automatically be removed upon closing. B. Ask the seller to resolve the tax lien before closing. C. Have the title insurer include the lien in the title policy for future coverage. D. Proceed with the purchase as the tax lien will be covered by the title policy. Answer. B. Ask the seller to resolve the tax lien before closing. Explanation. A tax lien is a serious encumbrance that must be resolved before closing. The buyer should request that the seller pay off the lien to ensure clear title to the property. The title insurer would likely list the lien as an exception in the policy, meaning it would not be covered unless resolved beforehand. Wisconsin statutes. Chapter 632, Title Insurance Policies. Question 13. Policy exclusions. A title insurance policy for a commercial property in Wisconsin contains a Schedule B with several exceptions. One exception notes rights of parties in possession. What does this exception mean for the policyholder? A. The policy does not cover claims related to tenants or other parties who may be occupying the property. B. The policy provides full coverage for any disputes with tenants occupying the property. C. The policy covers claims from third parties who have legal possession of the property. D. The policy excludes any claims related to physical damage caused by tenants. Answer A. The policy does not cover claims related to tenants or other parties who may be occupying the property. Explanation. The rights of parties in possession exception typically excludes coverage for claims arising from tenants, leaseholders, or others who have a legal right to occupy the property. This is a common exception in title insurance policies for commercial properties, as the insurer does not want to cover disputes related to leases or possession that are already in effect. Auto endorsements. Wisconsin statutes. Chapter 706, Conveyances. Question 14. Mortgage and title insurance. A buyer is purchasing a property with a mortgage loan and receives both an owner's policy and a lender's policy. What is the primary difference between these two policies? A. The owner's policy protects the buyer while the lender's policy protects the mortgage lender. B. The owner's policy provides temporary coverage while the lender's policy offers long-term protection. C. The lender's policy includes additional coverage for zoning and land use issues while the owner's policy does not. D. Both policies provide the same coverage, but the lender's policy is more expensive. Answer A. The owner's policy protects the buyer while the lender's policy protects the mortgage lender. Explanation. The owner's policy protects the buyer from title defects and issues related to ownership, while the lender's policy protects the mortgage lender's interest in the property. If a title defect arises, the lender's policy ensures that the lender will be compensated for any loss that affects the loan security. Both policies typically run concurrently but serve different interests. Wisconsin statutes. Chapter 632, Title Insurance. Question 15. Title defects. After purchasing a property, a homeowner discovers that the previous owner had a mortgage lien on the property that was not cleared before closing. What recourse does the homeowner have under their title insurance policy? A. The homeowner must resolve the lien at their own expense. B. The title insurer is responsible for resolving the lien if it was not disclosed in the title policy. C. The lien is automatically removed once the title insurance policy is issued. D. The homeowner can seek legal action against the previous owner to remove the lien. Answer. B. The title insurer is responsible for resolving the lien if it was not disclosed in the title policy. Explanation. If a title defect such as a mortgage lien was not discovered during the title search and is not listed as an exception in the title policy, the title insurer is responsible for addressing the issue. This may involve clearing the lien or compensating the homeowner for any financial losses resulting from the defect. Wisconsin statutes. Chapter 706, Property Conveyance Alter Title Insurance Claims. Question 16. Title insurance for condominiums. A buyer is purchasing a condominium in Wisconsin. What specific title insurance coverage should they consider given the nature of the property? A. Special endorsements to cover common area disputes and assessments. B. Additional coverage for personal property located in the unit. C. A separate policy for each individual in the condominium association. D. Coverage that excludes any shared property issues. Answer A. Special endorsements to cover common area disputes and assessments. Explanation. Condominium buyers should consider special endorsements that address common areas, homeowner association, HOA assessments, and disputes related to shared property. These endorsements offer coverage for issues unique to condominium ownership that may not be covered under a standard title policy. Wisconsin statutes. Chapter 703 Condominium Ownership Auto Endorsements for Condominiums. Question 17. Title insurance claims process. Which of the following best describes the claims process for a title insurance policyholder? A. The policyholder must provide notice to the title insurer immediately upon discovering a potential title defect. B. The policyholder must resolve the title defect before submitting a claim. C. The title insurer will automatically investigate any issues related to title defects without notice from the policyholder. D. The policyholder must hire a private attorney to handle any title defects before involving the insurer. Answer A. The policyholder must provide notice to the title insurer immediately upon discovering a potential title defect. Explanation. The policyholder is responsible for notifying the title insurer as soon as they become aware of a title defect. The insurer will then investigate the claim and determine whether the defect is covered under the policy. The policyholder does not need to resolve the defect on their own, and the insurer's duty to defend may be triggered by this notice. Wisconsin statutes. Chapter 632 Insurance Claims Procedures. Question 18. Marketable title. A buyer agrees to purchase a property but later learns that a third party has a claim of ownership to a portion of the land. The buyer seeks protection under their title insurance policy. What type of protection does the policy provide? A. The policy guarantees that the buyer will receive marketable title free of all claims. B. The policy covers the buyer against loss from title defects, including third-party claims, but does not guarantee marketable title. C. The policy will pay the third party to relinquish their claim to the land. D. The policy guarantees that the seller will resolve any third-party claims before closing. Answer B. The policy covers the buyer against loss from title defects, including third-party claims, but does not guarantee marketable title. Explanation. Title insurance policies provide protection against financial loss from title defects, including third-party ownership claims. However, the policy does not guarantee marketable title, meaning the property is free of all issues affecting its sale. Instead, it ensures that the insured is compensated for any covered losses if a defect is discovered. Wisconsin statutes. Chapter 706 Real Property Conveyances. Question 19. Insurable title. Which of the following best describes insurable title in the context of a real estate transaction? A. Title that is guaranteed to be free of all defects, encumbrances, and claims. B. Title that may have minor defects but is deemed acceptable for title insurance coverage. C. Title that has been certified by a court as free of all legal challenges. D. Title that cannot be insured due to known defects or encumbrances. Answer B. Title that may have minor defects but is deemed acceptable for title insurance coverage. Explanation. Insurable title refers to a title that may have minor defects or issues, but these are deemed acceptable by a title insurer for issuing coverage. While the title may not be perfect, it is insurable, meaning the insurer is willing to provide coverage despite any minor issues. Alter title insurance definitions. Wisconsin statutes. Chapter 632 Title Insurance. Question 20. Title insurance endorsements. A commercial property owner in Wisconsin wants additional protection for future construction on their land. Which title insurance endorsement would be most appropriate? A. An ALTA 9 endorsement to cover encroachments and violations. B. A zoning endorsement to cover non-conforming use. C. A mechanics lien endorsement to protect against construction-related liens. D. An environmental hazard endorsement to cover potential contamination. Answer. C. A mechanics lien endorsement to protect against construction-related liens. Explanation. A mechanics lien endorsement protects property owners from claims made by contractors or suppliers who have not been paid for work performed or materials supplied during construction. This is especially important when planning future construction, as mechanics liens can be filed after the project has started. Alter endorsements. Wisconsin statutes. Chapter 779 Liens. Question 21. Subrogation rights. In the context of title insurance, what does the term subrogation refer to? A. The right of the title insurer to step into the policyholder's shoes to recover costs from a third party. B. The process by which the policyholder assumes responsibility for title defects. C. The automatic transfer of the policyholder's ownership rights to the title insurer upon filing a claim. D. The insurer's right to deny coverage based on the policyholder's actions. Answer A. The right of the title insurer to step into the policyholder's shoes to recover costs from a third party. Explanation. Subrogation allows the title insurer to seek reimbursement from a third party responsible for a title defect after compensating the insured policyholder. This ensures the insurer can recover some or all of the losses paid to the policyholder. Wisconsin statutes. Chapter 632 Insurance Contracts Alter Title Insurance Provisions. Question 22. Title insurance premiums. Which of the following statements about title insurance premiums in Wisconsin is true? A. Title insurance premiums are paid annually. B. Title insurance premiums are paid only once at the time of closing. C. Title insurance premiums are adjusted based on market conditions every 5 years. D. Title insurance premiums are paid monthly, similar to homeowners insurance. Answer B. Title insurance premiums are paid only once at the time of closing. Explanation. Title insurance premiums are typically paid as a one-time fee at the time of closing. Unlike other types of insurance, such as homeowners insurance, title insurance does not require ongoing premium payments. Wisconsin statutes. Chapter 632 Title insurance alter insurance rules. Question 23. Transfer of title insurance. If a property owner in Wisconsin sells their property, can the title insurance policy be transferred to the new owner? A. Yes, title insurance policies automatically transfer to the new owner upon sale. B. No, title insurance policies are not transferable to a new owner. C. Yes, but the new owner must pay an additional transfer fee. D. No, but the new owner can request a continuation of coverage. Answer B. No, title insurance policies are not transferable to a new owner. Explanation. Title insurance policies are specific to the original insured party and do not transfer to a new owner upon the sale of the property. The new owner would need to purchase their own title insurance policy to protect against title defects. Wisconsin statutes. Chapter 706 Real Estate Transfer Alter Title Insurance Coverage. Question 24. Quiet title action. A homeowner discovers that a neighbor claims ownership of a portion of their property. What legal action can the homeowner take to resolve the dispute and clear their title? A. File a lawsuit for adverse possession. B. Initiate a quiet title action. C. Request an amendment to the title insurance policy. D. Have the title insurer negotiate with the neighbor. Answer B. Initiate a quiet title action. Explanation. A quiet title action is a legal proceeding used to resolve disputes over property ownership and to establish clear title. This action helps the homeowner to eliminate any challenges or claims to their title. Wisconsin statutes. Chapter 841 Quiet title actions. Question 25. Public record search. What role does a public record search play in the title insurance process? A. Ensures the property is free of environmental hazards. B. It guarantees the accuracy of the property's boundaries. C. It identifies any liens, easements, or encumbrances on the property. D. It determines the property's market value. Answer. C. Identifies any liens, easements, or encumbrances on the property. Explanation. A public record search is an essential step in the title insurance process. It helps to identify any existing liens, easements, encumbrances, or other issues that could affect the property's title. The information uncovered during this search is used to create the title commitment and determine what, if any, exceptions will be included in the policy. Wisconsin statutes. Chapter 706 Title search requirements alter title search procedures. Question 26. Standard versus extended coverage. What is the primary difference between a standard title insurance policy and an extended coverage policy? A. An extended policy covers additional risks not covered by a standard policy, such as encroachments or unrecorded liens. B. A standard policy provides full coverage for all potential title defects, while an extended policy has more exclusions. C. An extended policy requires annual premium payments, while a standard policy is a one-time payment. D. A standard policy covers both the buyer and the lender, while an extended policy covers only the buyer. Answer A. An extended policy covers additional risks not covered by a standard policy, such as encroachments or unrecorded liens. Explanation. An extended coverage title insurance policy provides broader protection than a standard policy, covering risks like encroachments, unrecorded liens, and other issues that may not appear in public records. This can be especially important for buyers who want more comprehensive coverage or to title insurance coverage types. Wisconsin statutes. Chapter 632 Title insurance. Question 27. Exclusions from coverage. Which of the following is typically excluded from coverage under a standard title insurance policy? A. Claims related to zoning and land use regulations. B. Claims related to undisclosed heirs. C. Claims related to unrecorded mechanics liens. D. Claims related to recorded easements. Answer A. Claims related to zoning and land use regulations. Explanation. Zoning and land use regulations are generally excluded from coverage under a standard title insurance policy. These issues are considered part of the property's legal status and are not typically covered by title insurance unless a specific endorsement is added to the policy or to title insurance coverage. Wisconsin statutes. Chapter 706. Zoning and land use. Question 28. Title insurance for mortgage refinancing. A homeowner is refinancing their mortgage. What type of title insurance policy would the lender typically require? A. A new owner's policy. B. A lender's policy specific to the refinancing. C. An amended version of the original owner's policy. D. A continuation of the previous lender's policy. Answer. B. A lender's policy specific to the refinancing. Explanation. When a homeowner refinances their mortgage, the lender typically requires a new lender's policy to protect their interest in the property. Its policy is similar to the one required for the original loan, but is specific to the new loan associated with the refinancing. Wisconsin statutes. Chapter 632. Title insurance or to title insurance for refinancing. Question 29. Adverse possession and title insurance. How does title insurance typically address adverse possession claims? A. Title insurance fully covers all adverse possession claims. B. Title insurance may cover adverse possession claims if they were not discovered during the title search. C. Title insurance never covers adverse possession claims. D. Title insurance covers adverse possession claims if the property has been occupied for at least 10 years. Answer. B. Title insurance may cover adverse possession claims if they were not discovered during the title search. Explanation. Adverse possession claims can be complex, and whether they are covered by title insurance depends on the circumstances. If the claim was not discovered during the title search and is not excluded in the policy, it may be covered. However, some adverse possession claims may be excluded from coverage based on the terms of the policy. Wisconsin statutes. Chapter 893. Adverse possession or to title insurance exclusions. Question 30. Title insurance and foreclosure. What happens to title insurance policy if the property is foreclosed? A. The policy automatically terminates upon foreclosure. B. The policy remains in effect and continues to cover the policyholder after foreclosure. C. The lender's policy remains in effect, but the owner's policy terminates. D. Both the owner's and lender's policies are terminated upon foreclosure. Answer. C. The lender's policy remains in effect, but the owner's policy terminates. Explanation. In the event of a foreclosure, the owner's title insurance policy typically terminates because the policyholder no longer owns the property. However, the lender's policy may remain in effect to protect the lender's interest in the property until the loan is fully resolved. Wisconsin statutes. Chapter 846. Foreclosure or to title insurance rules.